Hello everyone, welcome to another weekly market review. It is 31st of May 2021. We have a monthly close right around the corner. Let's look at some high time frame analysis. Total market cap on the monthly, like most crypto charts, is going to be closing a bearish engulfing. Essentially, this does need confirmation with the next candle. If we look at the weekly, we did get that bearish engulfing with a powerful follow through. So this is a confirmed bearish engulfing. Where the week after you get that strong move down, basically blew away all the price action of the last 2 to 3 months. So this is very confirmed bearishness. And last week's candle has done the bulls no favors. Very weak. Did not even come up and close near the weekly levels. It has closed with a reflection, of just not any strength in this market. We'll just go to the 4-hour. So these scribbles worked out really well. Essentially, this was not the time frame. I was just drawing it on a high time frame. So this is not the time frame we were looking at. But it is still potentially possible that we can range within this. Basically, the yearly open support on Bitcoin and this big resistance level on the total market cap chart. For now, I'm going to hide these. But you can see, this was a great plan. It gave big moves. This is for the entire market, minus 34 and plus 45. There's a lot of great moves that could have been caught. And also, again, this was a great place to be finding shorts, looking for places to manage risk for the downside. We got another nearly 20% move down from here. So for now, total market cap is ranging. We have found support over here. Market structure has not broken, but as you know, I was tracking the market. We will talk about that, what to look for in ranging markets. But for now, this is still looking like a range. We haven't broken market structure to the upside, but if that can potentially happen, then we can start to, if we make a higher high and higher low over here and start to build a bit of a grind, we can start to make a case that we could revisit the top of this range again, or close to the top of this range again. So that is what is potentially possible. But while it is ranging, guys, this is just what it is. In the middle of the range, it is noise. Need to find points at the extremes of the range, which means up here or closer to this weekly level, and if you do want to trade this range. Otherwise, if you are not experienced in trading ranges, then it's better to just sit out, and wait for this to resolve. We have spoken about what the resolution is, to the upside. We need a higher high, a higher low, and a move upwards. Until that happens, the higher time frames and everything else about this market is showing us that this is either likely, if it is very bullish, it's likely to just consolidate and then move back upwards. But otherwise, this could be another redistribution with price moving further back down. And to the downside, we have spoken about the potential targets, which are all the way down here, another 20 to 30% lower than where we are. Yeah, it's about 40-45% lower. So if we do eventually break down from here, then this would make for a great move south, a nice short to the next proven support level. So until that happens, we do play the range, short the tops and try to find at least close your shorts and take profits once we are moving down. Because ranges, you just have to be very actively taking profits for either direction, and we don't have any confirmation besides the significant levels. Looking at Bitcoin on the monthly, you can see this is essentially one of the most bearish monthly candles we've had on Bitcoin. It could easily close close to 40% down. So monthly time frames don't lie, guys. And I think by now most of the market understands that there is no V bottom reversal. If they don't, it is just, of course, inexperience and naivety. And you cannot be mistaken, and we can make no presumptions about how this would pan out, guys. You cannot. A lot of times when the market does this, it takes months to repair. So if there's just a presumption that, okay, we will make 1 month of consolidation and moon, it's just a presumption. We can't say. There is a lot of dynamics that goes into repairing something like this. Outside of that, it is what it is, very cleanly a range. What I want to do very quickly is just look at some anchored VWAPs. First, from the March bottom, well, that is still close to 24k, just for this entire range. This is the first kind of support. And the second one I want to look at is from the December bottom, because this is a big accumulation, right, guys? This one is a big accumulation, essentially two years plus of accumulation before moving out of there. So that is about 17,500. So if the market is really, it's supposed to get attacked bigly, and you have some kind of fundamental events, these are the two big levels that I'd be looking at. Essentially, this is what is showing us. But this is not such a long period of accumulation, but it is significant. About 200 days. What 200 days of accumulation brought about, this big reaction. So this is about where the market could find support, if this is where the buyers are still waiting. But if we're talking about since the market bottom, then it's still all the way down to 17k. And if we want to speak about this entire range, because we don't have more historics because of the symbols that I have used. It has Binance. This is mostly spot. But if we had to use the entire range, this is when BTC moved into this range, 3k. So this is massive amount of accumulation, guys. 1100 days for Bitcoin is huge. So if you want to look at the entire range, then I think we should look at the anchored VWAPs from here, and that is also still somewhere around 14,500, and this is close to the minor break even, guys. Between 17.5 and 14.5, this is an area of extreme value for Bitcoin. I mean, if price had to get there, I would be very surprised if it's anything more than a wick. This is really a golden box. So if it is so, that this is a big correction, and it is going to make a multi-month correction, and we do have to flush out, because see, you understand, it's pretty rare that everybody gets a chance to buy the bottom. So we have to see, if price starts to range here too long, you do have all those Wyckoff schematics going all over the place. And I did speak to you before about the concept of scarcity. If everybody's seeing it, it is likely to not happen. It is more likely to not happen, because the entire crowd can't buy the bottom, guys. Just like the entire crowd could not sell the top, it's more likely. What evidence do we have right now? The evidence we have right now is that the emotion is still bullish. The bias is still, according to the narrative. And if that is so, that's always dangerous while distributions, because you would see similar narratives on distributions until the market shifts its bias to the end. If you get a market narrative of capitulation, depression, that is the kind of narrative you want to really be looking forward to as even a long-term buyer. But as of now, the bias is still, oh yes, we're going to moon, and everything will flip. Many people are buying and accumulating, and so for that, if you want that to be proved, let price prove that. Don't use that sentiment and get into that sentiment, and go ahead with the crowd. So for now, I would say, if there is a level of extreme scarcity where I would be very comfortable, considering what price has done, and based on price alone, then I think this is the level. Very quickly, I just want to look at the fibs, and if it matches up, yeah, I think it would match up with the 786. Yeah, so very interesting. If it is fundamentally, if I'd be looking to long, then this is where fundamentally I would be looking to long. There is of course technical confluence here as well, and I would say that there would be a confluence of sentiment as well in this zone, because we'd break and fail that retest of previous all-time highs. If that happens, this would be just a gift, guys, if it manifests. But for now, I mean, that's still far away, and none of that has manifested. For now, we are just in a range. It's quite clearly marked out. Your interests are in the extremes of the range, guys. If you're trading in the middle of the range, you're likely to get chopped out. What you do look for in ranges is these kind of stop runs. You get a stop run, then you can be managing your risk. This is tight risk management right here. If you're going long on a stop run like this, it's tight risk management. Sometimes you don't get any stop runs. You can see on top, this was why these were a little more difficult to short. So you got a stop run here. We were looking for a short over here, and this is the kind of setup I posted. If you do get a stop run, you're looking for where price reacted to and where the break of market structure took place. Break of market structure took place on this little 1 hour consolidation. So if that happened, again, you have a place to manage risk. Price reacted beautifully from it. So it's very technical kind of setups on Bitcoin and for Bitcoin, if you do want to trade it. Outside of that, what I would say is, otherwise you need to know how to use the technical aspects of price, and a lot of times Bitcoin is ranging. It is just pure harmonics, so there is a lot of harmonics in here. I mean, this is a long study. I don't think you can just start to build out harmonics. Here's another one, quite a clean bat. So essentially BTC is moving in harmonics right now, guys, and with this sideways price action, this can carry on for a while. But if you do have to, it is very technical plays. All of these are very technical plays, and you have to understand the dynamics to be able to play it. Outside of that, if you don't want to be looking at these setups, it's better that you just spend your time doing other things, because that would give you a better it would give you a better give for your time, especially if you were able to save money on this drop. Do not waste it trading this, because there is the higher probability setups require a very keen eye and a very sharp finger. So if you're not catching those, just let it be. Look for the edges of the ranges and see if you can find some high probability setups. Here's some stats for the S&P 500, up 10% on the 100th day. Very positive stats. Percentage positive for all years, 70%. This is good probabilities, guys. It's good probabilities that we will end the year positive. And basically this is year-to-day returns on day 100 and the rest of the year. So you look at the average, it's about 8.5%, 9%. So we still have this potential bias for upside, but there's the other thing about seasonality as well, that we will just quickly look at right now. So here's seasonality for the S&P 500. We are just moving out of May and into June, and you can see how this market moves for the next 2 to 3 months. So June, July, August, September can get a lot of chop. So you should be prepared for that if you want to trade this market. Essentially what happens is a lot of people just go on holiday, guys. This is summer holiday, June, July, so essentially the market is just left ranging a lot. So this is 20 years of history. So if you do want to trade this, there are still setups. There will still be assets where you will find trends. Just make sure to keep this in mind and make sure to be taking profits. This might not be the time to be looking for swing positions. Looking at the commodities chart on the monthly time frame, this is not a very good wedge, guys. Generally, I like more touches than this. Drawn it nonetheless because it's got a nice breakout and retest. But on the monthly time frame, we've got a very solid monthly close. This is the highest close we've gotten since June 2015. So I would say it's very positive. It's a significant resistance level. You can see we've held it. Price has never closed above it. This was previously resistance, support. So this yearly level has been a big pivot in the commodity space. And this monthly close is giving us a bit of a hint in terms of directionality. Because you can see where generally it wicks, now the body is closing. And again, high time frames don't lie, guys. This is very significant in terms of what can manifest. This is the beginning of a trend. This is the high that made the low. We have broken that. So we have a very high time frame reversal. This is a big range. I think it's a multi-year range. It's 1400 days of range. We are closing above that range as well. So again, so significant for this market. And if this does continue to manifest, we have quite a bit of upside. One small level up here to take, but I think once price closes above this, there's big move for commodities that is potentially possible. This will bring a lot of distress to the common man, because things will just get so expensive. But if you're a trader, then this is where you make your bucks, guys. This is high time frame stuff. For seasonality, we can look at the gold seasonality chart, and you can see we're getting close to. So we have May, end of May, and June. But historically, gold bottoms out around here. So last 30 years, pretty decent June to December performance for gold. So again, looking positive according to that gold copper chart that we saw last week. Precious metals look good.
If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!